The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another gorgeous day at the headquarters of Technical Trading and Investing, TFNN.com. Your headquarters for Technical Trading and Investing. It is a gorgeous November 8th down here in Clearwater, and just the beautiful sunshine and being able to walk my dogs with shorts on just a few minutes ago, go run around the backyard. It's all worth it. This is always the time of year that I like to call up north to my friends and tell them, hang on just a second, I've got to turn the air conditioning off so I can hear you just a little bit better. So it's always worth putting the knife in just a little bit and turning it for those people that are already seeing a colder weather. The leaves start to fall. Always a nice day to come out and just stick it to the man up north. Today, November 8th, is the 129th birthday of Hermann Rorschach. And us as traders really need to understand just how much we can impart in our own mental faculties on what we see in charts. Everybody would like to say that charts are absolute. There's a few things you can do, and normally, in my case, I try to only look at the charts that have clear and unambiguous meaning in them. I like to see charts that test previous highs or lows on 50% less volume. That's something quantitative that doesn't lie. I always wondered about that song, that cocaine, it doesn't lie. Never took cocaine, so I don't know. But how could cocaine not lie? It seems like if it was anything, it would be a liar. I digress. I get another point in my digressing catalog, and probably well on my way to winning the digressing award again next year. But when we look at charts, look at Rorschach tests, the question is, especially in psychology, they tended to be highly subjective, and you could lead the viewer as a psychologist into some answers that you like. So they finally set up some fairly decent guidelines for using them over the years. The guy that actually did them, Hermann Rorschach, published a book. Some people were kind of playing around with these. He basically came up with the definitive set of 10 slides. There's a lot more now, but the definitive slide of set of 10 that people were supposed to look at and come to the same answer unless you were a total whack job. And of course, being around Freud at that time, there were a lot of Freudian kind of beliefs out here. But as we look at Rorschach tests, we need to really understand when we're looking at some kind of signal, and what we're looking at is just some kind of ink blot. A lot of different ones out there, very interesting. I never was one that could see all those, if you stared at it, what are those charts that pictures that if you stared at them long enough you could see the whale in it or something. I never was able to do that. Now, if you're watching on Tiger TV right now, 99 out of 100 people said this was a bat. I think you could probably say it looked like a bat that was smashed fairly flat, pretty unambiguous, or at least a lot less ambiguous than the rest. But all the other ones seem to have some kind of psychosexual thing out there. But he built this, born this day in November 1884. He was a Swiss Freudian psychologist, but died 1 year after publishing all his work. So he never really got to see what went on after that. I think he had appendicitis and undiagnosed, and died about a year after his book came out. No one ever agreed how to score the Rorschach responses objectively. It's still a huge argument in psychology. But I think it gives us an idea that we can probably 99 out of 100 people say it's a bat. We know it is. A lot of these other ones, it could be, it could not be. We need to resist the belief that every time we see something that it means something. Maybe we're just making it up in our mind like the ink blots. Freud also actually did have to come out and eventually say, because a lot of his books people took just a little too seriously. And I think sometimes people, especially reading charts, read a lot more into stuff than it deserves. We've talked on this show many times about how everybody's trying to make a Gartley work all of the time. And we talked about just any kind of chart pattern out there. For the most part, you need to get the direction of the markets and the direction of the sector correct. And if you start reading too much into something, then normally you get on the wrong side of the trade. Sometimes a cigar is just a cigar was a famous saying from the big psychologist of his day back in the early days of psychology. Today we say to a hammer, everything looks like a nail. We just need to probably pull back a little bit and understand that the numbers that we're looking at in the charts and the patterns are just a higher probability, and that if we try to put too much into something, especially when it's dubious, when you see very bright, vibrant, unambiguous signals, those are the ones to act on. The ones that could fall either or. If you're always saying that they always fall into that pattern or everything else, you're probably not being too restrictive on what you're looking at. I think we can all agree that that chart, the ink blot, looked like a bat. All the other ones, those 10, probably wouldn't have a lot of agreement on them. So just remember, sometimes a cigar is just a cigar. Don't try to read too much into it. And every nail is not always, well, every hammer, when it looks at something, is not a nail. Anyway, we were looking and talking about Tesla yesterday. A little bit more happening out here today, was a little bit lower. See if I have a quote on it. It was down as far as 132.32. I thought we'd get one more gap down. Pretty much got it today, I think, and that's probably setting some kind of low out here. Probably a little bit of that was a market movement. We were up, what? Let me update these just to make sure. Up 17 points on the S&P cash with a 2.45 billion shares. Had Fed presidents come out and try to blow some more air into this market. There's just probably not enough in there. We did see that the options market went from showing almost the bottom somewhere around 100 points down to about 20 points down. We had a massive movement into shoring up at least the futures for the S&P all through yesterday. So was it a trick? Was it a bear trap? I don't think so. I think what happened was everybody in the street figured out one thing, and that was that we're probably at the top of the market, and it is now time to start distributing stock. I don't suspect that we're going to see the indexes off significantly over the next 10 days, but I think that they will be down. I think what we are seeing in the November in the December options market is something that would be about 60 points down. I suspect that we're going to be selling all the way through March as we go through the taper, and the Fed is going to do everything it can to make sure what they call is an orderly sell-off. So I'm going to be short for a while. I don't see any reason to not be short, but I don't think that we're going to get it all in one day. I think when we get big moves like we had yesterday with monstrous volume, the Fed's going to step in and come back in. I think the street guys are smart enough to know it's going to take them 3 or 4 months to get out of a lot of these positions, and they're going to start selling. So I think we've gone from the mode of making a market top that is fairly evident to the point where we're going to see a lot of sideways trading and eventually to see, as we have over the last few weeks, stocks just fall out of bed one day when they can no longer support the lofty levels that they're at. And we should be able to get some very good shorts off, I think, probably all the way through March now. So I will be continuing watch it. Let's see, do I win a gold star? No. Okay. What else do we have going on here? Alternate histories. You'll never know. We've talked about this with Microsoft yesterday, but same thing with Tesla. We'll never know the cause when two things happen at the same time. Tesla's falling down and making its probably last gap down. But it's fairly evident that what we now know is Tesla went to a level that they could never justify, or at least I could never justify, that they would never be able to make the amount of cars that they needed to. And even the Tesla CEO, now that he was able to push out all that extra stock, so he had a lot of cash in the bank to expand, is not going to even have close to the amount of stock he needs. Money he needs to expand the business. Also, he can't even get the batteries to generate the 25,000 cars that he says that he can sell today. That was the discussion about opening a new factory just to build batteries, just to get to the 25,000 units that they want to now. We've talked about how there isn't enough lithium down in the mines of Chile, even if they went full tilt to do the 300,000 cars that Tesla is talking about. There is going to be some kind of technology out there, most likely an air metal battery or a super capacitor or something else that will have to come before electric cars really can gain wide acceptance. And we've seen a few examples of those, none good enough yet to supplant lithium-ion batteries, but it will happen. Anyway, heard a lot of different ideas on why Tesla went down. People talked about the third car catching fire. I have a feeling it had little to do with that and almost everything to do with Tesla finally coming to grips with reality. That reality, it's going to take a huge amount of money to build a car company, and that their margins are going to probably wildly drop as they spend that money to build factories to build their cars and to build out their dealership network. We will be back in a minute. You can always give me a call at 877-927-6648. That's 877-927-6648.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And continuing with the news, Priceline CEO's leaving. They've got a new CEO coming in. The question is it time to ring the register? And I have a feeling that if we're looking at a stock that is going to be in distribution for a little while, it's going to be Priceline. Anytime a CEO is leaving when a company makes a new high or big highs, the thought is that he's leaving at the top of the market. People get nervous. My guess, though, is exactly what we're thinking is that we're probably very close to that high in the stock, if not the same. Now, can it go a little farther? The answer is yes. It's made a fairly decent sign from about $994 that it is not going to have much more in the tank. It did go up almost another $100, and we're up today, and some decent volume. My guess is that you're going to get one more shot at this thing, and a lot of these are going to make a close back below a moving average, which probably going to be like look at these things on the 3x3 displaced moving average or even a 9-day moving average. You're probably going to see the next move under those as the time to really start taking shorts on some of these other high flyers that haven't fallen out of bed yet. Okay. Yeah, I'll do that in the second half of the hour. We got several stocks that the dinners want me to look at, so we'll do that. But just thought it would be interesting to see what these stocks were doing. But keep a close eye on this one. Almost always, I'd say 80, 90% of the time, that funds will ring the registers on these. And why this thing's hanging up here, they'll slowly sell, and one day it'll be like Netflix. It'll just fall out of bed, but not before they can sell as much up here as they can. It's going to be hard, very hard for any new CEO to come in and move the needle even a little bit and improve their earnings. It's got to be almost about almost the perfect time. What was it? The just right. Little Red Robin Hood? No, that was the wolf. My Three Bears? Yeah, we'll have that. Anyway, just a thought. We got a few more things to go through here. DDD said that the rumor was likely bovine excrement over the last couple of days. Pretty much everybody agreeing with me today. It was just a good excuse to run a company with almost a 30% short interest rate. And probably the thing that we'll probably just spend a couple of minutes with, and then we'll get into some more charts and some more news after the bottom of the hour. But right now, our Secretary of Foreign Affairs, Kerry, is leaving for Geneva, or he has left for Geneva today. They are intending to make a deal with the Iranians. That deal will mean that they will not have to turn off one centrifuge. And that pretty much means that we're at least complicit in letting the Iranians have nuclear weapons. They get up every morning of the day and say as soon as they have a nuclear weapon, they're going to blow up as many Israelis as possible. In 1932 or 1933, Hitler wrote a big book called Mein Kampf with all his plans to kill as many Jews as possible. Everybody else looked the other way. And, of course, even into 1938, we had a gentleman come out and wave a piece of paper and say, peace in our time. Basically, he said, yeah, you can have Poland if you just don't do anything else. The problem is you can't negotiate with evil. You're just kind of whistling past the graveyard. Us throwing all the Israelis under the proverbial Muslim bus probably this weekend only makes me think that the Israelis probably think they only have one way out, and that is probably using their nuclear weapons first. I would say that if there was anything that was close to the 1930s leading up to a big war, it is now. The United States acting weak, stepping back, and not confronting true evil like we see in the leadership of Iran. Most people don't know it, but it only took a little less than 25% of the Nazi Party were actually part of the Nazi Party in Germany. Only about 30% of people in the United States wanted to go independent in 1776. Anyway, we're going to break here. We'll be back just shortly. But I'm worried about probably some Middle East problems, and we'll probably be seeing them in the next month if anything's going to happen.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, I had a few questions in the den. You can always call me or even email me. You can call me at 877-927-6648. You can email me, and hopefully I'll get a chance to get to it before the end of the show at PATH, that's path at TFNN.com. Question was, what does Riverbed do? They had a nice jump here today. Basically, a nice little short squeeze in the stock based on some dubious takeover or sellout rumors. This thing basically ran right up to its previous high. A lot of volume today. But what does Riverbed Technology do? They make a lot of boxes that control traffic on the network to remain at full capacity. Think about this. When you go out and you get on the road, they purposely go out and try to push push stoplights so you stop at every single light. They don't want you to keep flowing all the way across town because, of course, people, they think, at least traffic weenies, think that you're going to speed up and speed up and speed up. They want you to go slow and give everybody a chance to go. But more than anything, traffic lights are just a way of slowing everyone down. Think of it just opposite. Think of each stoplight perfectly timed to get the most amount of people across town instead of the least amount of across town, and that's what Riverbed does. They make a lot of technology to make sure that whatever bandwidth they have on the internet and inside their own networks is used at 100%. All that bandwidth is time and money, and the quicker they can get those bytes in, they can get those bytes back out. And there's a whole thing on the edge of a network, especially what they call forward-facing, and that is companies like Amazon, other companies that have big infrastructures are always fighting to optimize what they have in the resources, and that's what Riverbed does. They make boxes that are basically traffic cops to optimize all the technology to move as fast as possible. We've got Lou in Nashua calling today. How you doing today, Lou?
Fine. How are you?
Fantastic.
Good. Question on what your take is on natural gas.
I think I would like to see this thing back down at $16.60, at least on UNG.
Oh, yeah.
I think we're just working our way back down. It's the same thing in gold. We've got a lot of especially with gold when we're seeing it down today, another $22. This thing needs to really test that 1772 level probably on Monday. And we're probably going to see the same thing in other kinds of commodities like crude and natural gas. And the question is just, we really haven't had the really cold winter yet to really burn off a lot of the extra natural gas. There's still so much of it that, at least when I looked the last couple of days of last week, they're still just randomly burning it off up in North Dakota. So they're not even bothering trying to save a lot of the natural gas that's coming out of some of the oil wells up there. You know, the thing that would probably do the best thing for natural gas was an approval of a pipeline out of that area. It looks like we're probably not going to get that. And I think that the market had kind of started to rally thinking that the president would sign off on it. It looks like he doesn't think that with the problems he's having and his approval rating, the last thing he wants to do is throw any of his base out of his support group. And I think he was leaning to the level of going with the Keystone pipeline. But any pipeline out there, natural gas is just too hard to ship out of that area by rail. It's just not worth it. We actually need to use some of it up to get the price going up. And we neither have the cold weather yet, nor do we have a pipeline that could ship some of that somewhere else and take a little bit of the pressure off of storage. In fact, I think storage is at 100%. So I'm going to look for at least some change in the total capacity. Fracking has actually been a disease to natural gas. There's just too much of it right now.
Yeah, right.
And I think most of the industries are going to turn over to it in a big way, but they want to know that they've got a consistent source of it. And when they see the government going against coal and going and dragging their feet on pipelines that would get a lot of natural gas out of that area, they're still thinking, well, I don't want to convert to natural gas only to make sure that the government hates it too and doesn't want it to get out. But a lot of people still thinking that the war on coal that has been fairly successful is moving to natural gas, and we'll be living in caves somewhat soon. But that 1660 is just hanging out there. It's got a high volume low. It tells you that there was still a lot of weakness back out there. We had a test up there almost at $20. We came in with 20% lighter volume. Just above that at 2029, you had 9.1 million shares. So we came up there and tested it twice with less than 50% volume. We need to be able to come down there. We did test or get into that candle with lighter volume, but I want to see it pierced. I want to prove the point that 1660 is going to hold. So we need to get down there, and I'd like to see very light volume. Maybe that is at the bottom of it. But I think that, and we were talking about gold yesterday. I think we just need to really be sitting on our hands now and waiting for the big signal on a lot of these commodity stocks to really give a good and unambiguous signal that they've made lows.
Very good.
Okay.
Yeah. Could I ask another question?
Sure.
The euro.
Uh-huh.
Do you think it's a decent shot here, or do you think we're going to pop higher?
I mean, I think it's probably pretty good. I mean, we had another back-to-back good moves in the dollar index, and I think I don't get into the individual as much as just how the dollar index is moving, which is a basket of 6 currencies. So I'm not into it as much as a lot of FX traders. But I sure think that we're heading back up to $84 on the dollar index. I think it's unambiguous that Europe is doing weaker and we're a little bit stronger, and that's going to move the dollar up and the euro down.
Very good.
We've had a nice bounce today, and we're still up $0.50 on the dollar index. I think that's everything you need to know right there.
Yeah.
Okay.
So, appreciate it.
Thank you, Lou. We're going to go to Ron in Denver. How you doing today, Ron?
Hi there, David. I just wondered, I know obviously Intel is your favorite semiconductor stock, but
yep.
I was just wondering on one, what's the chances of recovery on AMD?
Slim or none.
Okay. I know they're getting out of computers, but I guess going into servers and gaming consoles and other things.
Yeah.
Cloud computing.
The problem is they're getting in a lot of other people's business, like ARM Holdings, and they neither have their own fabs, so they can't make their own technology. They've got to go through Taiwan Semiconductor. Of course, they actually have a finished product that's not easily adaptable like ARM. Apple buys the ARM design and then modifies it for their own use. Mm-hmm. Maybe they're going to try to get into that. The problem was they had a shining opportunity and failed to execute on it back when they were about $8. And that was to really bite the bullet and go after Taiwan Semiconductor to start building smaller and smaller devices. And even if I think they're going to get clubbed like a baby seal by Intel, even on the server chips. Just the new 14-nanometer chips that Intel have come out are going to be sip so much less power than AMD chips. I just don't see how they compete.
Okay.
I mean, I think Intel can get a premium on the same chip somewhere between 20 and 25%, even in the micro server business, just because the things aren't going to suck that much power. Did you listen to the show last night when I was on with Tom O'Brien?
No, I didn't. I had a meeting I had to go to, and I wasn't able to.
Okay, we talked a little bit about Seagate. Seagate spent 10 years developing a hard drive, or not Seagate, Western Digital, and I think Seagate is too, developing a hard drive that will run with helium inside instead of natural air. And the whole deal on that is helium's about 1/7 as dense as standard air. And that drops the temperature about 5 degrees per hard drive, but also means that they can take a 4 terabyte drive and make a 6 terabyte drive out of it and drop the power in a standard data center probably in almost a little less than half. And right now, these things are running 24/7 a day. It's not a big deal to get a premium from your product if you can just show a little bit less power consumption. And these new Atom chips, I went out and played with several of them. You have a Best Buy close?
Yes.
Go play with the new Surface 2s from Microsoft. And there's also an Asus T100 transformer. If you can find that one to play with, I think Best Buy's getting them this week. Both are using the new chip from Microsoft. It's very cheap, very low power, but I think the T100 runs all Microsoft programs, and I think it's $350. and it's got a keyboard and everything. But play with those and see how you think they've done with dropping the price and the power consumption on those chips that are full x86, because those are probably going to be, or derivations will be, what Intel's kicking out for those micro server businesses, which I think AMD is trying to go after. But AMD has to send their chips to Taiwan Semiconductor. Taiwan Semiconductor can do 28 nanometer technology, or 24, or sometimes even 21. But they're nowhere to 18 or 14 like Intel is, and I don't know how you compete.
Okay.
Yeah, they have no fab, so
wow.
You know, that's pretty much it. You see, Altera and Xilinx both signing up to have Intel build their chips now. So
wow.
I don't think we're that far away from Apple actually asking Intel to build some of their chips. Even though they're being ARM designs, if the price is right, they'll do it. But you can't do Taiwan Semiconductor's the only game in town, and they're 18, 24 months behind Intel. Okay.
Wow! Oh, wow! What an answer.
Yeah. Too much.
I compliment you very much.
You talk to a programmer about what time it is, he'll tell you how to build a watch. That's what I've always been told.
It is just so detailed, and you know, I just compliment you so much.
Okay.
Thank you very much. Thank you.
You bet.
Bye.
I had another question about DSX from the Den, and that is Dyna shipping. You know, you've got this nice little gap down here and a high volume bar, and it really looks to me like we're just dancing over that, but it probably wants to get a little bit farther down. On 8/14, the close out there was $11.07, and we keep getting down to about 11.16 and hitting those lows. I think you got one more chance back down there at that 11.16. What is that? 11.06. 11.07, and I think you're just going to get into that candle somewhere, and that's probably, if you were looking to buy this thing, setting up nice, energy's coming out of each leg. I like everything about it except trying to get a good price on it, and that would be probably inside that candle of 8/14 that had 3.1 million shares. So I think you're kind of into it there. You can also look at that May 26th high that spiked with 3.6 million shares. So you know that's where the start of support's going to be, and it's going to be in those. I mean, you got three candles out here that are all telling you that in that area is when everybody gets active. And so I'm going to say that's the same thing. You might get down to 1075, 1080, but if the volume just shrinks, you see 500,000 shares back down there. I think that's the time to hop on that. Yes. Yeah, you had a question in the Den. I was talking about hard drives and them putting helium in. Actually, the last helium manufacturing plant was in the United States. Nazi Pelosi, the ex-Speaker of the House, wanted to shut it down for some reason. And I guess a lot of people came up to her and said, let's go ahead and start manufacturing helium, or let's at least keep the plant in business. I see a bunch of weird things about whether or not helium is still readily available. It's not a big deal to build a plant to make it. But it's kind of weird that they wanted to shut the plant down. A lot of people are going, we're running out of helium, which is ludicrous. I think it's... the second or third most common element on the planet? Oh, well. We shall be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, there's a few things going on, and I'm going to talk just a little bit more about helium. Of course, basically what happened is the government got involved in it. No one wanted to make helium and basically get it out of the natural gas, the methane that normally comes out. Since we've got all the probably natural gas we all ever need, we could always get as much helium as we want. The problem has been it's artificially low, so no one was in that business. You could get everything you needed for helium-filled hard drives in about 1 day of production up there in North Dakota. So not a big problem. Just nobody in that business because the government's selling it for half. And the whole goofy thing that they got involved with, the prices would probably plummet to nothing if the government got out of it after a couple of years, which is probably what needs to be happening. That's the same kind of rot that you hear about companies getting involved in making graphene, and you need to buy a graphene mine. Well, that's a load too. You can get graphene out of a pencil lead. and basically some of those cons on graphene mines would have had the graphene mine worth about $1.5 billion when they're probably worth $100,000. You could probably get all the graphene you needed in lead pencils if you went up to the Walmart. I mean, it's going to be one atom thick. The stuff is going to go a long, long way. I think, if I remember right, you can make one pencil. Number 2 pencil had enough carbon in it to make the same 4 football fields worth of one atom thick graphene. So probably another big con job out there. One of the interesting things, I'm going to play a little clip here, was Bitcoins. Kind of interesting that they sent somebody out to CNBC with Maria Bartiromo to talk about Bitcoins. This was just the final part of the discussions, though, so I'll play it.
Before we go, because we got to jump, guys. Jeff, would you like to be paid in Bitcoins?
Yeah, I don't know if it would be for me, but I'm saying if there are no, if there are other people out there who are
you're a bull on Bitcoins, but you don't want to be paid in Bitcoins.
You know what? Sure. You want to pay me in Bitcoins? I'll take my payment.
This is just like
busted. Thank you, gentlemen.
So that's it. Everybody loves Bitcoins, but they don't want to be paid in Bitcoins. Going into a weekend here, and tell you what, I always like to recommend something I've seen that's very good. Let's see here. Let's get to it. It's at the last slide here. There it is. In probably 1992, I was in a CNBC control room. We were selling a lot of equipment to them. And I kept on seeing this in some of these videos of a gentleman that was making an industrial video for Winnebagos at the time. And it had more F-bombs than a flight of B-52s could drop. So if you don't like colorful language, probably not the movie for you. You can find it on iTunes. I think it's floating around the web. It came around. This movie came around in about 2005. But this is all about 2 weeks of a guy making industrial videos in 1989 or 1988 in Iowa in the middle of the summer at about 100 degrees. But you can check them out, videos on YouTube. But if you want to see a good documentary and don't mind the colorful language, Winnebago Man, excellent documentary to check out this weekend. We'll see you Monday, same bat channel, same bat time.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.